Guy, if it's Thursday.
Today's Thursday?
Yeah, it's Thursday.
You know what that means?
It means John Butters.
We've been doing Butters on Wednesday.
Oh,
yeah. You think about it. Something like Butters, you do them every day. Maybe you rest on Sunday. But
right, if you're a new viewer.
If you're a new viewer.
John Butters, he's the Senior Earnings Insight Analyst over there at FactSet. He has been on our program on many occasions.
Recently.
He puts out a weekly, it's called Earnings Insight. We get a preview of it. It drops Friday. You can have it in your, look at that, in your email box on Friday morning. Go to insight.factset.com/subscribe. Okay, but right here, before you get that note tomorrow morning, we kind of want to run through what we think is one of the most important points. We were just earlier talking about, per FactSet, what the expected year-over-year earnings growth is for 2025, and it's expected to be up 14%, Guy, from this year. That's expected to be up 11%. But John is drilling down a little bit on revenue growth for this year and what we should expect, kind of into next year. Thoughts here, Guy?
Well, revenue growth for the S&P 500 for the second quarter of 2024 is 5.3%, right? That's the estimated. We'll see. Now, what he says is this marks the highest revenue growth rate since the fourth quarter of 2022. So 2 years or so, 15th straight quarter of year-over-year revenue growth. All encouraging things. The question is, and John doesn't get into this, he just puts the data out for people like us to interpret. Is that sufficient enough revenue growth to justify the multiples that we're seeing?
And so one of the things that I think came out of Q2 earnings, and I know John has taken a look at this, is like, okay, margins, okay, if we're at peak margins, right? So if revenue growth starts to decelerate a little bit, then you have a situation where there's going to be downward pressure on earnings, downward pressure on margins. We've seen this from some of the consumer companies, their inability to kind of put through some of the input costs that they were able to do over the last couple of quarters, which is why I think it makes sense to drill down on some of the sectors here. So Butters has 10 sectors are reporting year-over-year revenue growth led by information technology
Makes
sector.
sense.
Now, one of the things there, let's just kind of go deeper on that. We know what's going on. We know that generative AI has been a huge boon for many companies that are basically the nuts and bolts of this sort of move here. So, Guy, when you see tech, it's kind of a bit of an outlier. The materials sector is the only sector reporting a year-over-year decline in revenues. Talk to me a little bit about that.
That to me speaks to a number of different things. If you look at the move in copper over the last, 6 months, but it's not just copper. It's commodities across the board, ex gold. And if you think about sort of the slowdown that we're seeing, the slowdown in terms of ISM and all those different manufacturing numbers are going to manifest themselves in materials first and foremost. And it's not surprising that industrials is basically flat.
Yeah, and so we talked a little bit, I think, last week about that ISM number. It's moved into contraction. I think speaks to everything that you just mentioned there. And just the last thing, here's the look ahead, Guy. Analysts project revenue growth of 5 to 6% for the next 5 quarters. That's Q3 2024 to Q3 2025. Again, if recession fears are the thing that gripped the market over the last week or so, it probably seems a little bit optimistic that we're going to have 5 quarters of 5 to 6% revenue growth.
I think that's exactly right. I think you're going to see, just the way I think earnings growth is going to get ratcheted down, I think you're going to see the same thing in terms of revenue. I think earnings will come down. Earnings growth will come down faster than revenue growth, but they're both going to come down. I think in order to try to maintain or save margins, what you're going to see is the unemployment rate can continue to tick up. So all this actually makes a little bit of sense to me.
All right. Well, we love John Butters' work here. I'm excited to see as we get through Q2 earnings season, some of the work that he does, Guy, kind of taking a stab at some of the stuff that we saw, some of the things that the companies are guiding to going forward. So again, if you want the Earnings Insight blog in your email box on Friday mornings, go to insight.factset.com/subscribe.